Right. Right, just let me know that we've got the right screens shared. Give us a
I'll lend you 10,000 euros, teach you how to invest it, and give you access to a private channel where I share absolutely all my trades, so you can invest it.
All my videos.
Access to a private channel where I share absolutely all my trades.
Let's turn it.
Access to a private
Right, is that it? I've got a few videos all kicking off in the background, which are pretty annoying. Is that it? I've got a few videos all kicking off in the background, which are pretty annoying. Right, let's get going here. I've got a few videos all kicking off in the background, which are pretty annoying. That's it. Eventually, it's having all these flipping screens and yeah, right. Okay. So can you see my mouse, guys?
Yeah, we can see it fine, thanks.
Yep.
Right. Cheers. No worries. Let's get going. Right. Get rid of that. Let's get going. Right. Right. Great. Right. Morning, everybody on YouTube. I forgot about that. Sorry. Morning, all. Let's get going. Right. Well, it's all about, as Trump calls it, Liberation Day, isn't it? Flipping heck. He's I think it'd be known as the tariff king from here on after. Absolute mental. But there we go. Enough said about Mr. Trump. FTSE today, ATR is come down to round about 10, and we let's put this up. You can see we're FTSE, DAX, and Nasdaq all come off. If you've read the report this morning, if I can get that report up, get rid of this off the screen, and let's get this report up. Get off. There we go. So again, risk off today, and you can see what's happened with the markets. I won't bore you with reading verbatim everything that we've written. This is, of course, this is our AI data that runs up and gives us headlines every day from 120 odd different websites. So there we go. It very much is the same as yesterday. We've got a few things we want to watch out for today, which is 9 o'clock on the consumer prices on the euros. So we want to look out for the DAX on that one. We didn't do any Swissy info, any Swissy trades, because we had the real estate info coming out early this morning, and RBA interest rates, as you're probably all aware if you read the report, are all stayed the same. So very much same old, same old. This afternoon, we've got ISM manufacturing. Everyone will be watching out for that, and the jobs reports as well. But for us in the morning, that's not going to affect what we do in the morning. So our AI has come up with some recommendations. Gold would be, we're on that one. Euro USD, that flew up yesterday. That was one of them yesterday. And the S&P, yeah, not sure about the S&P. We'll have a look at that. USD Japani coming down, FTSE down, DAX down. These two are definitely selling into strength. However, first of the month. So we are expecting money to come into the market today. So what I'm going to do on the DAX, I'm going to, if we can get the market to close the gap quite sharpish this morning to here, then we'll get an alert and we'll look for buying the DAX on a bit of a bounce off the close. Excuse me. And let's see what we can get on that. Now, this is the interesting one. We've got first of the month, as you know, money generally does come in on the first of the month, every month in the FTSE. Issue we've got here, we've got a closing gap from the 31st to 86.58, and we have a close from yesterday down at 85.48. 85, 82. So a bit of a conundrum here. Is the market going to take off? You can see on balance volume has curtailed itself. Drop that down into 5 minutes so you can see what volume is starting to come through into the market. Renko blocks are red. We're above the daily pivot. We're above the daily close. Is the market going to take off and go for closing this gap? I would like to think we can get some sells into the gap here, 8660s to 8700s, and we'll have a look for some puts on that as well, I think. See we can see if they're available, and we'll have a little look at those. Gold all-time record high. One thing I will say, guys, before we get into the FTSE, turn your bots off on the gold now. If you've got your bots on, turn them off. We're an all-time record high. We broke the 31.28 on gold, the record high on Monday. Cash in it opened and then blasted straight back up. So I would turn what meat on the bone have we got here? Oh well, you could put your bots on. Yeah, sorry, I didn't realize we had such a pullback. So stick your gold bots on. We'll stick the gold bots on again. Just put them on. I put both of them on, and then you can manage them as and when. So gold number 1's on, and gold number 2. We'll put that one in as well. And then we can be off on that one. So, right. So those are on. Right. I'm not showing you the screen, am I? So it's on a different screen. Switch the gold bots on. The 2-2 and then relentless. And we'll see. They can take care of the trades if something runs up, but we'll analyze gold after we've got into the FTSE. So, right, FTSE up. So I want to look at the put options on the FTSE as well. So you can see where we are. The market is very negative. Market is negative. So market's negative. So we were looking for a Camarella breakout long reversal here, a potential bounce. So that's a cam trade. ATR's 10.6. We'll call that 11. So what we're going to do is we're going to set that cam up now, that cam trade up now, just in case we get that. So cam up is 86.53. So we'll call this 86.53.2. So we'll call this, what should we call this? We'll call this 86.52.5, just a slight front run of the cam. So what we're looking for is a market. The market does spike up. We're looking for an ATR spike reversal off the cam. So that's what we're looking for. We've got a pivot risk here to close the gap, and we've got a close in trade here. How long have we got? 49 minutes. That's 40 couple of seconds. Let's get into 5 minutes. We really want to see what's going on here on the 5 minute. Money should come into the market, but ideally it'll come down first before it goes up. But we have a magnet in the market on the 31st, a hole in the market, in the cash market here. And we have C-ball in the way, and we have a close down here. So there's a bit of a hole in the market. And let's see how the market reacts. You can see on balance volumes running up. So the market is running up. Just going to put these, kind of put these onto one side so we can have a look at, we can look at these cash, we can look at these puts at the same time. Is Andy in the room? Does anybody want to do the puts? Silence. I'm going to put them up anyway, just to have a look. I don't know who's on streaming and might have a little look. Might be interested. Let's get these puts out up on the out to one side. So I'll get the indices up, the daily indices. Look at the FTSE puts, and we're looking at if we can. I like the 80s. I like the 86.60s, as I've said. They're at 29 at the moment. 86.70s. I don't think we're going to stay up here. So what we're going to do here, guys, for the guys that are doing puts, you can follow me here. We are going to put this to one side, pardon the pun, so we can see what's going on with the trade as well as looking for these puts. So 86.60, I would like to get those at 25. So we'll put a contract on at 25. An order on at 25, I should say, and we'll have that placed done. And I'm going to put an order on if we can get that for some 8700s. Will we get 8700 today? I don't think we'll still. I don't think we will be up at 8700. So we're going to put an order in for 8700s at 25 as well, and we'll have those good till a date, and we'll put those in for 12 o'clock today. In other words, if it doesn't tag in at 12 o'clock, cancel the trade. So, and we'll put a 200% return on that, and we'll buy those at 25 until I've just deleted that 12 o'clock. There we go. Done. Take the trading IG down. Pull my chart back. And let's see what we can do. So this is the first 5 minutes of action. There is no point in trading straight into a cam level. A bit suicidal if you're going long. What we want to do is to get tagged into that cam trade. The other thing we can do as well is, because we want to sell into some strength, so that we would like to have a little bit higher than that eventually. No, I was going to suggest putting a short up here onto the FTSE. Is negative today. So if we can get this, that would be nice. We're looking for that cam trade to be hit. We'll have to wait and see if we can get up there. That would be nice. So we've been filled with our 86.60 puts. So what we're saying is that the market will finish under 86.60 today. First of the month, we are expecting money to come in. This money's coming straight in. And let's see if we can get that cam trade. It's a system trade. We do it all the time. The issue is, the risk is today, of course, is that we've got a magnet here. So the market is likely to come up to the magnet. Also, the issue we have today is it's a first of the month. So it is a system trade. We would hope that the market is going to, is that May 86.70s come in as well? Right, no, not it is. No, it still works on gold. So there's a hole in the market. Let's see if we get, I think that gap, and we can easily see that's probably close by now. It's within a pip or two. We'd like to see that come off. $86.70s are 27 at the moment to buy. Once a just put on the screen, just put the DAX up just to keep an eye, and the DAX has just gone off like a scalded rat, straight up. So we're not interested in the DAX. We're expecting the DAX. We looked at the DAX trade last night to do the DAX trade, but if we had put the DAX trade on, we'd have opened up at the same level as we put the trade on yesterday. But the market has now just gone up like a rocket. So there's the gap officially closed from the 31st. We can get that off. The issue we've got now, of course, it's the first of the month. We're on camera breakout long. Two things we could do here. If we get stopped on here, then we could look at a 1 minute flacker. And we could try and trade this as high as it can go. But as we get up towards the 8690, 8700s, I would like to sell that, that's for sure. What we're relying on here is a hiccup around the C-ball level. Doesn't look like that's going to happen. If we are stopped out of here, then we will do an immediate fractal stop, a reverse. Yes, so we're stopped out of that. That's a shame. Right. What we're going to do now is we will. Do I want to wait for the trade to short? I'll get on the back of this. Well, the issue is here is never chase a trade. That is a system trade. It works over 80% of the time. The issue was there that we had a magnet, and it's the first of the month where money coming into the market happens. But nevertheless, it's a system trade, and it's quite likely that you will get a bounce. We've got a fractal breakaway under camera breakout long. The issue we've got here, the issue we certainly have in front of us here is where do you put your stop? Because we're into, as the mustard color on the chart here shows, this is a 4-hour resistance, and this is 1 hour resistance levels. And as you can see into here, kind of looking at 24, 25 pips. And the stop would have to be under the fractal, which is 30. So that's not giving us a 1-to-1 risk reward. So what we're going to do, patience pays. We've got to wait for our trade to come to us, which today would be a short.
Alert triggered.
An alert going off. So best have a look at my alert. So I think these alerts are typical, isn't it? As soon as you put the alert on, it stops alerting. So it's either gold or Germany.
Alert triggered. Alert triggered.
All right, well, let's just go and have a little look. Right, so here's a fractal starting. Here's a fractal point potentially starting here. Well, ideally, what do we want is a market to come back, provide us with a fractal bottom.
Alert triggered.
Have that break into the top. So we've got a minute or two before that happens. So let's just go and have a look, see if that was gold or the DAX. Right, so gold coming down.
Alert triggered. Alert triggered.
Put an alert on the gold to say when we're back. Now, two things we can do here with gold. We've got the bot switched on, of course. We can do a 15-minute bar reversal. Or we can do a 15-minute fractal. Or we can get super, super aggressive and use a 5-minute fracker. Now, there is a 5-minute frac setup here, which is quite nice. So you can see here that we've got the 5-minute bar breaking the 9 EMA, the second 5-minute bar, both flat bottoms, really, really nice, and then produced a fractal here. Now, to trade that, it would require another all-time record high. But since we've been, this is a juggernaut. You never get in front of a speeding truck, you're going to hurt yourself. Listen, that's just like the market. the depth of this fractal. So you never, people always try and short go against the trend. We like to trade with the trend here. So we've got 10.3 there, and we've got enough headroom to do a one-to-one really into this all-time high. Fractal structure supports that. We're going to, let's have a little, just a quick measurement. We're going to do a direct break of that fractal. Let's get the measure ruler out here. So not going to select or not. All right. 10.5. So 10.5 and 10.5. We'll go for a one-to-one on this. Sure. So we're going to break split difference on that. And we're going to do 10.5 and 10.5 with a 2% risk profile on that. On a 5-minute frapper. Let's just zoom right out quickly. So you can see where we are. Market's really on a ripper. This is where the market stops for a half an hour, server switchovers on gold, and it zooms back at 11 o'clock. So markets up, all-time high, pull back, and then Asia Pacific markets pull this market a lot further up. Can't get too excited about the market being overbought. I think liberation there. I think as Trump's calling it tomorrow, it's going to be everyone's got everyone very skittish. So, like I keep saying, the best market to trade this week is gold. If you concentrate on gold and gold only, you'll have a very good chance of making your repeat targets for that day. That's for sure. And it's very, very well. So we've got the potential 2%, having lost 1% on the FTSE. We've got the put sorted on the FTSE as well, so get that money back and then some. So we're looking for this breakaway. If it's a 15-minute bar, then that's fine. I'll just show you, we're looking at an ideal 15-minute bar. So this is the perfect storm bar. You have a flat bottom Heikin Ashi candle. In other words, the market has accepted the price and gone straight up. We then close above the 9 EMA. We're above the rest of all the EMAs, and that is a no-brainer 15-minute bar. So for the guys in Oz, there's no Aussies up today. Oh, I wonder what happened to, well, Jeff filled his pockets with gold yesterday, didn't he? So yeah, I don't know where he is. Let's have a look. So we're 1% down. We're going for a 2% trade here. Let's see what we can get. Right. Oh, we've got our own little ghost here. Benjamin. Is that Mr. Talent? With these roses. Nice to see we're attracting the odd troll. It's always nice. Is that Benji Talent? Right. Let's go back to the FTSE. So we now have a fractal position here, structure here. I said it would go in. So there's a fractal with a fractal bottom. So we could either have an impulsive wave up into here for a trade. We have the FTSE 8660s in at 24.9 and the 8670s already in the money. So out of these two, we're looking for at least 200% return on each one. So we're already in the money on the I'll show you rather than just talk about it. Where's the options again? Donk. Get the option screens on. The option screens. So 8660s and 8670s for 24.9. Put them on. 8660s we bought for 24.9 to 26, and we bought the 8670s for 24.9 to 33. So nice. We should make a bunch of money out of that. We've had the impulsive moves. This is what I mean about not following markets. You can follow markets, and you know, we missed out on this. What did we miss out on? Let's get the ruler up here. We had a stop of 11 and it went to 17, just pipped us out and took us down. So what we can do now, this market coming off, we can either look for put an alert for a little bit higher up, but the market's negative. It's had its impulsive move with money coming into the markets. We'll put an alert up here if the market comes back up. We've got both the puts in the 8660s, 8670s, so great. We're saying that the market's going to finish under 8670 and the 8660s. We can come out of the 1 minute now, and one thing we don't want to do is do an immediate short, because this may well be just an impulsive move, because the markets go up in a wave, or we call it an impulsive wave, or a phase wave, or a phase. Call it what you want. Markets only go up, or they only go up, or they go down. This could be a move up, a pullback for a second leg to the top side. We do not know yet, and you're not going to find that in 1 minute. If we are going to be aggressive trading the market, then we can do a 1 minute fracker. But we're doing a 1 minute fracker. Don't forget, a 1 minute fracker against the trend, and we don't really want to do that. We do have a close here, so not forgetting there's a hole in the market, and the hole in the market is down here. So one thing I'd like to be able to do, if we are going to do this aggressively, I want to see a closing with 9 EMA on the 5 minute bar, or for those guys like 15-minute bars, as long as it's not too large, we want to get a 1-to-1 into the close here. We don't know yet that that's not, that we don't know that that is the high. So the risk is trading this with a stop up here of 31 pips to close this gap here to get nearly 1 to 2 is at risk, and I don't want to put the people in the room at risk. So, hey Kevin, you're on YouTube. Yeah, I met. Yeah, morning. So what we're going to do with this one? It's so difficult with the been first of the month after the EOQ end of quarter trades. The market's had its impulsive move up, and now it's hopefully going to close that gap. But we need a mechanism to close it. We cannot just decide, oh, we're going to press the button, whimsical. We need a strategy. We need discipline. And like we traded the C-ball trade, a discipline didn't work. Trades do not work all the time. But if you're systematic at it, and the trades from a statistical point of view work more often than not, then there's only one outcome: is you're going to make money. But you've got to be disciplined in the way you apply your strategy. 15-minute bar, that's going to be a large 15-minute bar to close that. So I think we're probably going to need to drop down to 5 minutes. So we just take these colouring by numbers off at the moment. So we've got a really nice bar there. So we've got, so the thing I'm looking here, we've got this close under the 9 EMA. Does anyone in the room, not on YouTube, well, I suppose on YouTube, I guess. Anyone know what we could use to close that gap coming down? Any ideas? Silence. No ideas. Right, okay. Well, if we get this closing the 9 EMA, then I would probably be minded for a gap trade here below the fracker. So we're looking at that's quite large that for the FTSE. 41 pips. That is over a 30% ATR move, but that would support our puts as well. Incidentally, if the market does come down to the close, cash out your puts because they'll be well into the money at the moment. So we're well into the money. The whole screen's blue. 86.60s are in the money. They're at 40, yeah, 49. The limit's 49 on boards, and the 86.70s limits on 75 or no. So we're in the money on both of those puts. I wonder if I can put the puts on. Oh, there we are. There's the 87s. So there's the puts with 10 points up on the puts. And the target is coming into here on the puts. So you can see we're nicely into the rupees there. This one, not so much, 86. We are going up still nicely. And so both our puts are in the money. So this fractal, so what I'd like to really see is for this come down, then move back up and give us a new fract. So ideally, if we come down, not and give us a little bit more of a pullback and then down to the close like so, it would give us in a tighter stop. But at the moment, the price action is saying, well, that's the stop. So we've got the market, no matter what we think, the market is always right. So let's wait and see. What I will do, we will put an order in to close that gap while we run off to look at some of the markets. So the order needs to be 43 pips on the stock side, and the target will be a lot larger, but we want this fracker down at 28.5. Well, we'll round it to 28. That's good enough. And we're looking for a one-to-one risk. Put the limit in. What's the limit? That'll give us a little, just we can do it. Should we just do one-to-one? No, I think we'll probably go below the close today. But let's just round that up for numbers' sake. 43 pip stop, a one-to-one in there. So you can see the fractal moving up. There's a fractal bottom here. We want another fractal further up here, a fractal top. So what we want to see this drawing coming down like a staircase, but the staircase going up. This could easily still be the first impulsive wave one, and then pull back, potentially for a next impulsive wave going to the top side. If that happens, we'll short it manually up here. We've already got the puts in play for the rest of the day. So we'll wait and see. But if this breaks down, then we've just got to go for them. But welcome, Simon. Welcome, guys. Mr. Benjamin seems to have gone quiet. Off trolling some other room as well, probably. I do like to interact with people. If you think there's an issue, I think his comments are, none of these traders make money only from mentorships. Really? Well, I don't know about the other rooms. I don't really bother about them. It sounds like someone being burnt. Unfortunately, I can't argue with you, Benjamin, because there are a lot of different types of people on YouTube who do things in different ways. Let's put it that way. Let's go and have a look at what's happening in this board. It's trying, isn't it? Look at all those indecision candles. Now we're using Heikin Ashi here. With Heikin Ashi candles, there only are three types of candles. There's a candle that goes green, goes up, and a candle that goes red and goes down. And then there's indecision candles. Those indecision candles are candles where the wick is longer than the body, and the break to the top side and break to the bottom, or the body is less than 3 pips. And you can see here, you do not want to use indecision candles. However, you can use fractals. So on this occasion, on 15 minutes, this doesn't look like it's going to be a 15-minute bar breakup, but it could easily be a fractal breakup. There are a lot of indecision here. Down in the 5 minutes, you can see the unbalanced volume is, well, it's just flip-flopping around. There is really nothing to see until this market really takes off. One thing you will see in gold is if it starts taking off, buyers, when buyers start to come in, you'll see everyone starts to follow. And you can see that by the size of the candles, the volume, the body, the size of the candles getting larger and larger. It's more people coming in as the market's coming through here. You can see the profit taken coming in again. Those could well be fibos. Which reminds me, if this is a bottom, we've got to make some assumptions here. There's lots of fibo traders on gold. Let's turn this off so we don't have to see it. And we'll get rid of the frappers in a minute, just hide the frappers. What we can see here is we can measure this phase wave with a Fibonacci extension tool for the hour impulsive moves. So we've got it set to an hour. So all the impulsive moves are 1 hour moves. So we're going to put our extension tool on and we'll go right to the bottom for the last move, right to the very top, and then right to the very bottom. Open this up, and that gives us where the market could possibly run to. So what we're looking at is an impulsive move, a new all-time record high. So 3155.7, which is exactly there. That is our 100% impulsive move. In other words, if the market moves up, pulls back, and it has the same amount of support in terms of buys and volume, that is the next target will be set. And you will be very surprised if you keep running those, go back on your charts, put your tools on, and you'll see it just keeps hitting the fractal moves constantly. There is another fractal trades that that people do, is they will then look at a 61.8 or a 78.6 retrace level and put an order in, so we can look at what they're going to do here as well. And then you'll be able to see a lot of our, well, and Andy's not in, the there is a 78.6 level that Andy religiously trades. So he does it on the 15-minute, but you can see here, there's a 78.6. So you can see the Fibbo traders, the set market there. Obviously, you don't put it on exactly 78.6. You front run it because everyone else is going to be doing the same. You put your Fibonacci buy on here, or you can put your Fibbo buy on here, whichever. So just to give you the heads up, what you've already done, of course, is you've looked at your impulsive move target here. You've assumed that to be true because you've got to assume things when you're doing the analyses. That's your target, but you want value. So what you want to be doing is you want to be putting in an order. If you're a Fibbo trader, a 61.8% pullback or a 78.6, and you want to be putting your stop under the market. Now, there are some other methods that you can actually use. If you're using a 78.6, you can measure the 78.6 level, get my ruler, 78.6 level here to the 50% retrace level there. That's not Fibonacci, it's just a 50% retrace level. And that will give you 8.6 pips. And that would be your target. And your stop is exactly the same, 8.6. So you have 8.6 stop here. That is another way of doing it. So you're looking for small movements in the market. Can I put my risk reward think tool in here? So there's your risk reward tool. Just giving you ideas. This is all recorded anyway, guys. So of course you can go back and reroute, relook at everything. So this is your 78.6 Fibbo pullback into the market, stop under the swing low. The other thing you can do is wait for either a 61 or a 78, and you will put your stop, the spread plus one good pip, but 2 pips ideally, just for the extra wiggle room under this retrace level. And you can, I'm just talking about Fibbo trading now. You could have gone for the 61.8, so you're in here. Your stops 11, 12, 13 pip stop, and your target up here is 24. So you're nearly going for a 1 to 2 risk reward there. That's Fibbo trading. Let's take these Fibbos off a minute so it doesn't get too noisy. Just try to show you, not in the business of hiding how we do the trades. We're here to help people make money. Help, as a minimum, help people understand how markets work, how other people trade them, so you can do the work. You can decide for yourself what best suits your personality. Let's go down the 15-minute bar. So 15-minute bar. So we now know the levels. Stops could be under here. We know the 78% here. We know the 61% here. We know if there were Fibbo traders, that's what you'd be going for, a 1-to-1. And then you'd be extending that all the way up to here. So you'd have your trading here, and you'd be going for nearly 30 pips. And it was an 8, was it 8.9 divided by 8.9? So you'd be going for a 1 to 1.33 risk reward. We've just been clicked into the FTSE short as well, so we can go back and have a look at that in a minute. But let's just keep on gold. So that could be a bit of a monster trade today. Need an all-time record high to complement the Fibbos. So there's Fibbo trading. There is 15-minute bar trading. There's lots of different ways you can do this. I'm just showing you things like personally how we trade in the room and what we like to use. 15-minute bar here would be the perfect storm to go along. We can use fractals because they work really, really well. There's a 15-minute fracker, I think, and we've got our line on there. We're using a 15-minute fracker just at the moment. I guess we could set a Fibbo trade again. Should we set a Fibbo trade again to show how it works? Right, yes, I will set a Fibbo trade as well. So we'll set a Fibbo trade at 3126.5. 3621.5, and it was 8.9, wasn't it? Yeah, it was 8.9. So we'll do an 8.9 and 8.9. Guys in the room, you don't have to do this. I'm just showing people on kind of YouTube some of the options if they don't have strategies, some of these things that we can do is just have a little one-to-one on that. And we'll have that buy in. If it can drop back down to that 78.6, 26.5, there we are. And there we have our one-to-one. If it comes back down and challenges 78.6 again, then we'll have that. You can see this target here. Let's get into the detail now, just to go back over this. So the target, obviously, if we'd gone into here, the market would already have hit that target. And we're looking for doing that roughly again. Market's a little bit scatty going sideways. Again, if anyone's got any questions, if you're on YouTube, just shout out, and if I can answer them, I will. So it's getting a little bit messy here with all the trades on. Just shut them down a minute and get into the 5 minutes. So you can see where the 5 minute fractals are. So you can see the 5 minute fractal. We've got a diminishing step here. You can see there's very, very much indecision on gold at the moment. And yeah, so we've got an order in down here to get us clicked in should the market come down there. If the market doesn't come down there, then we're not too bothered about that, because we'll get the market coming back up again. I'll put an alert in here. I'm not going to sit and watch these things. We've done our analysis, we've made our decisions, we know where we're going to get in on gold. Let's flip back on FTSE and show you where we are with the FTSE. It's dithering around, the market's come down, we've broke a fractal here. The market could easily come back up and produce another phase wave. So like it did from the bottom, that could be an impulsive move. And we could have a little impulsive move back up before the market then a return back down. That could easily happen. That's why we use fractals as our stops. So we're nearly 100% up on the 78.60s. So we're looking for 24.9 pips here to get 100% back in the market. We probably lost Benji now. He can go and troll somewhere else. Come on, Benji, do some speaking. You can't just sit there sniping and do nothing. Or maybe you can, I don't know. I'm not, and please, I'm not fingering you out just to be nasty or anything like that, because if people come on and make remarks about, oh, this is all rubbish or blah, 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 it means they've been hurt. And if we can help you, then I will. If we can help you understand what I'm doing or help you find a system that might work for you, then that'd be great. We're not here to do demonstration trading or selling mentorships or whatever it is. We're here to trade. Right. So there's the options. Right. I tell you what, let's go and have a look at the DAX, because we've got the DAX in 20 minutes. They've got the news coming out. we'll watch the news live and watch the reaction of the DAX. We've got the Euro PMI, which is the German PMI, coming out in 15 minutes. So we can have a look at that and see what happens really. So if you get a reading above 50, that'll indicate that the manufacturing economy is generally expanding. Therefore, it's a bullish sign for the euro, which means the DAX will probably come down. If we get a number under 50, then we will probably see the euro weaken slightly. It'll just signals activity generally that manufactured producers are declining, which is a bearish sign for the euro. So it's a bearish sign for the euro. If weakening of the euro, it will make the euro, the indice, cheaper for foreign investors to buy it. So you generally see the market go up. I can just pull this on the screen and you can see. Where is it? I've lost it now. There we go, PMI. So it's forecast to be pretty flat. If it is pretty flat, then we'll probably just see the market do what it's going to do today. It's normal motion, which will be negative. If we get a strong number, then you never can understand how people are going to react to this. But if you're going to make the euro stronger, you could argue in the longer term, it could make the base manufacturing better and the market will go up. But if the euro is stronger, then from foreign investors, it's going to be more expensive to buy. But the bigger news, of course, here is at 9 o'clock, and that's in what, quarter of an hour or so. These are the things that we want to see, whether inflation's going up, going down, and what's happening. If you are trading anything with a euro asset on the side of it, and at the moment, we're not really looking at the DAX for that. We're looking to short the DAX. Can't see there's any fantastic news coming out to support the DAX. The DAX has run up with first of the month trade.
Alert triggered.
All right, okay. So there's an alert.
Alert triggered.
That is our gold being filled. So in a quarter of an hour, we'll have a look at this, and we'll have a look at the impact live and exactly what happens, and then we can take it from there. So let's go and have a look at our gold. So gold's come down, clicked in right here. Let's get rid of the alerts. Alert triggered. We can get rid of the alert triggered for gold now. Done. That's gone. So we've been clicked in here. You can see the markets. I can go into the detail a little bit more. The markets come down. Donk hit the 78.6 again, and it's found Fibo buyers straight away. Okay. We'll put another alert higher off, and here we'll put an alert around about the what shall we put the alerts in? Where it's 20. We put the alert round about 30-ish up here, which means we are halfway there on the trade, and we could put a stop to entry at halfway and make it completely risk-free to get some money back on that. Right, so we're up on the puts, up on the 8660s, we're up on the 8670s. We're slightly down on the short. We've got a big stop on the short, over a 30% ATR. What else did we have on our slot sheet? We've got 15 minutes to go on before there's market moving news. So let's just go and have a look into the Forex. Remind ourselves what did we trying at the moment testing all these signals. So the short recommendations, USD Japani coming off. We know we're going to short the FTSE. We haven't started doing that. We know we want to short the DAX. We haven't done that yet, and USD Japan is another one that we should have a crack at, if that's a technical term. Right, let's get moving. Zoom right out. Let's have a look where we are on the 4 hour. All right, I've been measuring impulsive waves on the 4 hour, so phase wave 1, phase wave 2, identifying where the targets actually may reside. We can take that off. So there's no hidden magic here. We are looking at the market, trying to read the market and look at where it is technically, but also the technicals need to follow the fundamentals. There's no good having fundamentals and going against them. Very small time frames, you can make money doing now, of course you can. But what we want to do, or what I like to do, is if fundamentally the whole economy view is the market's going down, then we should be looking for a technical setup to complement that. So if we can get the fundamental and the technical to all align, then we've got all the ducks in a row, and it increases your probability of your outcome being good. So a quick tick list. We're under the 200 EMA on the 4 hour tick. Market technically is negative. And there's a 1 hour 200 EMA. Market is technically negative still on the hour. However, we have got indecision here on this indecision candle, but we are trading under the 9 EMA. So another tick into 15 minutes. Tick and tick. And we have now, if you've got if you haven't got the 15-minute guide, it is free. There's a link. There should be a link. I think there is a link. Let me just have a quick look. Let me just have a quick, I'll put this on mute. So I think there is a link here. Is it a link here? Oh, I've not put the link in here. So there isn't a link in here, unfortunately. But there is a link. Hang on a second. Let's just do this live. Where is there's a video here. That's the one, that video here. Keep it on mute. If you look at this video, which is called Master the Perfect Entry, and you will see down here, there is a link to get your free training guide. If you hit that link, it'll open up my website, and it is totally free. Oh, I've got some reviews. It's totally free, and it gives you a guide on how to trade, how to get the best entries. And all right, I haven't looked at those. Oh, Stuart, I lost you. Right, so have a little look at that, and if you're watching at YouTube and you're not subscribed, it would be nice if you could support the channel and subscribe. I could do a few more things that are free for people to help Simon. Already downloaded, really useful. Thanks, Simon. Yeah. Yeah. So Sam's already downloaded. Everyone in the room's already got this because they're in the room anyway. But please, it's a guide. It's not gospel, where it will certainly help improve your entries. So this would be a category 2. This is the perfect entry. Got 10 minutes to go. This is okay. That's the perfect entry. Can I pull? Bear with me a moment. I'll pull the guide up so you can see it. And where did I put it? Must read docs. Just looking at the learning center. Can anyone shout out in the room whereabouts I actually posted the Right, okay, I think I know where it'll be. It'll be trading strategies 15, it's a 15-minute bar, isn't it? So 15-minute bar, 15-minute guides, 15-minute bar reversal, 15-minute guide, there we are. Right, it's opened up on a different screen, pull it back up. So this is the guide. Totally free, just download it from the website. It shows you how to get into the market, and I'm going to show you the bars. So here we are, there's the bars. So flat bottom is always the best. Category 1, no wick. The reverse is the same. This is going long illustration. If you want to go short, then the opposite is true. So here we've got a wick. You can see here with a little pimple at the top. That is a small wick with a 9 EMA here, of course. 9 EMA here. That is okay to enter. So you could have entered here. Depends how confident you are in using this, but don't forget you have to use Heikin Ashi candles. It does not work with normal candles. Heikin Ashi is the perfect storm, the momentum candle. So this is your perfect storm candle. Get rid of that. And this is a perfect storm candle for 15-minute bar reversal. So you can see at the moment, let's keep on this for a moment, do a few more tech views. We've got 1, 2, 3 touches on the 15 minutes. The market is going down. We've got 7 minutes before we take that trade. Let's zoom out a little bit into the 1 hour, just get a little bit of a helicopter view of what's going on. Let's just get rid of some of this stuff. These are from things we've been doing before. And this was obviously targeting the market when we're going up, but that's already been hit. Let's clean this up. Let's clean this up again. So there's nothing pre-arranged. This is all live. So nice, you can see a nice impulsive wave, 1, 2, 1, 2, and a big one all the way down on news. And then we've had a retrace level. So do not be surprised. This asset, USD Japan, is part of the major pairs against the dollar basket. So don't be surprised if you see 78 or 60, 78.6, sorry, 61.8 Fibbo pullback. So we'll just do that on all the way back here. So market's more or less filled at the 61.8, didn't go up to the 78.6. It rarely does. Here's another tip. A lot of people use a 61.8 as a reversal. Some use a 78.6, which the market, if it is bullish, or in this case bearish, going down, you would expect the 78.6 not to be breached. However, a good guide is if that is breached, then you will more than likely see 100% retrace. So one of the things you want to watch out for, this is kind of the band of influence of where the market is going to, oops, let's get the box here. It's going to come down, so it's going to come down somewhere into this box here, and then it's going to have a usually impulsive reaction. So that will be people buying the market and coming out for profits, and it will be other people as well looking for the retrace to sell the market. So just be aware, 61 and 78 are very key Fibbo levels. The USD Japan, as I call it, is one of those markets that people use a lot of Fibbos on. So we can see at the moment we've got a 61.8. I'll mark that up, because if you are going to watch this later, then you can see what we've done. I've designated that earlier, so there we go. And there's the 78.6. Yeah. So I've got this bit of a helicopter view. We will need to have reasons to back up what we're going to do. Is there anything in line? I don't know. So let's pick out these points. You can see the markets. we've got this oblique, what appears to be an hourly resistance line now. Market has, you can watch me put the peak to point here. Need 3 points to be justified as a significant resistance line. 2 is okay, 3 is best. So we've got 1, 2, 3, 4, 5 here. This is proving to be an issue. Let's get down into the 15 minutes now. So we're now kind of looking at what's been happening on the Fibbo scales. We're now getting a rich picture on what how we can trade this. 3 minutes left in the life of this bar. The risk is that people will look to try and buy a double tap reversal here. That is the risk. From a longer time frame, we knew we've got an oblique resistance there, and we know it's been touched 5 times. So we know potentially, if we're right technically, is that if we use this 15-minute bar as an entry, stop above that swing high, it is an oblique bottom. So if the market comes back up, we expect it to find the action around this descending oblique resistance, and our stop's going to be above the swing high. So that's absolutely fine. Let's put our frackers on, and that will show you a fractal down here on the 15-minute. There's a 15-minute fractal break here. So in the room, we teach fracker trading as well. So fracker trading, that would be a fractal. If you were using fractals to trade, you would have traded that fractal here. And your stop would be here, and you would have been okay. But at the moment, we're not doing that. So it'd be 24 pips, and the target would be somewhere around about here, 24 pip target to get you a 1-to-1. But we're not using that technique. We're going to use a 15-minute bar. So let's have a look at where a target could be. We've got 2 minutes left yet. I'll tell you what we'll do. Just measure that roughly at the moment to see what the stops would be. That's 40.4. We're going to round that up to probably 41. Spread is 1. 42 plus 1 pip, 43. Where does 43 take us? Takes us down to the soft tissue resistance here. So we kind of know 43 is probably going to be roundabout okay. Let's just put that in at this very moment so we are ready to go. And then we'll do the Fibonacci impulsive extension just to see where the market could possibly take us to the downside. But we know we can get a 1-to-1 in here before we get to any strong resistance. This is all soft tissue resistance here. You know what I mean by soft tissue? It's the previous resistance. So can't be that W for win there, nice W pattern there that obviously worked. Let's get rid of this, that one there. 58 seconds to go. So we're going to put our trade on as a break of here. And we can do a direct break off here. We'll round that to 5. No, not to 2. Not to 2, to 58. Sorry, 58. So 58, that takes us down to this area here. So 35 seconds to go. Market's not on the next candle should break us short here. Let's go into the 1 hour. Big indecision candle at the 1 hour. Let's have a look at where the impulsive moves could take us. So we've got a 4-hour impulsive move. You can see the market comes all the way down a big run here. It moves up. We don't know where that impulsive move may take us. So let's have a look at that on a larger scale for the day, which is down here, all the way up to here. And we can see we have a 78.6 move, 61.8 down here would seem an absolute screaming obvious move. So that would be, you can we'll draw these in. I think I set these targets this morning. Yeah, I set all these targets this morning. If your AI report suggests short, but the 4 hour suggests long, which one would you follow? I would follow mine, Simon. If the EMA suggests it's long, and the AI report, I'm not being bombastic here, but it's an AI report. I know it's 100. We have this argument all the time. We get information. The AI report is from over 120 different independent sources. And to make the top 3 long or the top 3 short, we have to have at least 3 independent sources, including Bloomberg, Reuters, that say this should be the top 3. This should be the top 3 to buy, 3 to go short. My rule of thumb is never go against the trend. So if it says go against the trend, we don't take it. We just don't take it, because there are quite a lot of other fish to fry. And what we haven't done yet is show you some of the filters that will help you make your decision. So the reports we've got is a news report plus this, which will tag on to the end of it. I'm going to sort it out this week as a newsletter, so if people are interested in being part of the newsletter, get daily AI news. So I have an AI tool that collects and scripts information from all over the world, presents it in, as you know, into the bullet points. And I've got it set up here. There's the buy, sell. That's a 15-minute guide. We don't need to have that up again. There we are. So this is the news every day. Is a market risk on, risk off, and with all the independent, this is where all the news come from. So provide all the independent links so you can read for yourself what happened to the markets overnight, what's happened with gold prices and Reuters, and this just tells you what happened overnight. Key areas: gold, Asia markets, US markets, treasuries, what's going on, oil, banks, what's going on, and then economic events that are going to happen today and how that might impact the market. A little talky bit, what's going to happen with the medium to high probability trades. And then at the end of that will be not tagged on, will be the buys and sells based on that data, and that'll be a newsletter that goes out every day at around about 7 o'clock every morning. So you're pre-armed on what the market, not what I say, what the market says from all over. See if you're going through over 100 websites. Right, we're in the market now. So that's a long answer to a short question, Simon. Never trade against the trend. I would never trade against the trend. You can if you want to. I'm just telling my personal view is always trade with the trend. The trend is always your friend as far as probability of helping you hit your targets. So let's get this back in play when we'll mark up this Fibbo. We'll call that, it's a Fibbo extension. And we better put in what the Fibbo extension is. It's a 61.8, I think, is it? Yes, it's a 61.8. 61.8. I'm constantly, all the time, writing this data, and we are day traders. So we've got to be agile, we've got to be nimble, we've got to respond to the market. The market is always right, no matter what you think. I know you get people, they kind of have a room that is like a monolith of, oh yeah, the market's going here, and it might go there in 1 month's time. For a day trader, that is no use at all. You want to be able to read, you want to be able to see what's happening, understand how to react to it, knowing what tool to use, and executing the tool, and to do it in a very repeatable and transactional way. No emotions. You already know your strategies. You already know the work. More often than don't, and our strategies probably, I don't know, 70%, 80% of the time. Some of them are really, really good. So if you know the stats are on your side, your job is to use the filters, use the information, make your list, execute your trades, done, get out the market, do what you want to do, and then come back the next day. That's the idea of a day trader, really. Not to sit for hours and hours and run trading. You can if you wish, but you know, you end up getting burnt out asset machines. So we're in the market now. We've got 43 pips. The market's hit some soft areas here before, like here, here, here. So our first target is into what we call soft tissue, should be an easy target. And then
Alert triggered.
the 61.8% would be to extend it further down there. So rather than taking this trade here, that we've just taken this trade here, with our stops here, we'll be looking to extend it further here. So rather than 1-to-1, you'll probably get a 1-to-2. You know, right. Let's have a little, alert triggered, we'll think was gold. So let's go back to gold. It's telling us to do some risk management. So gold, right. So that's our risk management hit. Bonk. We had 8.9. We're over 0.5% up now. So we had 8.9. 8.9 divided by 2 equals 4.45. So we could do two things that we could do here. One, we could just do a stop to entry, make it completely risk-free. So grab it, stop to entry. So you got a completely risk-free, and we're going for the 1% here. This is our 2% trade. Or you could decide to, you could take half off at 0.5%. And let the you know, you could take half off and make 0.25% risk-free completely, and look for the next 0.5%, or look for this to run a little bit higher up into these levels, which I'm sure it probably will do. Or you could be pretty aggressive and lock in 0.5% profit by making this stop 4.45. All sorts of things that you could actually do. So what should we do on this occasion? Don't forget, we already are down 0.5% on the FTSE. I know on balance we're up because gold's up, USD's okay, we've got FTSE okay, we've got 2 puts on the FTSE making money, but it's not over until the money's in the bank. So I'll tell you what we'll do. We'll do a bit of risk management, 4.45. So our worst scenario is we'll make 0.5%. That's our worst case scenario. Worst case scenario, we're going to make 0.5%. Best case scenario, we'll make 1. And maybe we'll get a 15-minute bar before the 15-minute fractal, and we'll put an extra 2% in the bank on that. But we'll see. So this is the stop. If you want to, you know, you can see, I'll put an alert back up here. Put an alert back up here, so we can see what's happening. We don't need to watch the trade. We know where we are. So that was USD Japan. So, hi Steve, thanks for the live stream. No worries. Thanks, Gareth. Right, let's go back to this here. Since people have mentioned this AI report, I'll get rid of that. We don't need that anymore. Where's the AI report? AI reports, AI reports. What have you done with it? Where's it gone? Deal answer, daily news. Is there, where's the buy and sell? It's not there, is it? I'm gonna go back to, I've obviously closed it off. Let me open it back up. It's not in there. It's a trading center. Boom, 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 boom. Right, AI report, news channel. There we are. Boom. So from the Slack room. Right. So oh, that's not today's, is it? That was 31st of March, that one. Right, let's get the right one now.
Alert triggered. Alert triggered.
Let's have a look at that alert quickly. Oh, right, so we're coming up to our target, full target here. Just needs 8.9, doesn't it? It's 8.9 target. Yeah, there we are there. So we just need that alert that was going in. Get rid of that alert, we don't need that now. So we're looking for that market to put 1% into the bank there. Why can't I find my... Oops, there we go. There it is. I've got too many screens. I'm trying to live stream. We've got 1, 2, 3, 4 screens up. I keep losing myself. Buy and sell, buy and sell. There we are. So we're looking this, I think this has just come up within a Minji's watch it, hasn't it? So that was 135.3 and we wanted 135.3. So we missed that by 0.001 of the whatever. We can't lose. You don't have to get trigger fingers. You've just got to let the market play out. So we should get that. We should get that. So we've gone for, let's put this in the middle. We've not looked at the filters yet, have we? So USD Japan are going short, FTSE going short, DAX are going to go short. We've not looked at the news on DAX yet. So gold, we're going long and we're long on gold. We cannot lose on gold, which is nice. Be a shame if it reverses right on the nose. But if it does reverse right on the nose, we'll make 0.5% anyway. If it goes to full target, we'll make the full 1. There's no point in putting a target there if you're going to snatch profits. So gold, S&P, well, that's for this afternoon, and Euro USD is another one that we should really have a look at. So that's one that we should have a look at. Right. So that went to 8.8. It needs to go to 8.9 here, and that will give us a full 1%. So I'll just write down what we did on the FTSE. FTSE first trade, that was at -1. Gold, FTSE puts, FTSE 88.60 and 88.70, both at 24.9. And then there's a FTSE direct trade. I'm just writing these down for the stats, which was a 5-min tracker. And that was 43 for a potential 1% there. This one. Right. Look at that low triple top just there. Eventually it's just pushed its way through. So well done to everyone who did that and held on to that trade. Let's just have a look at what happened on the 15 minutes. So made our money. I think Benji's now run away. He's found a channel that actually does make money. And you can go and troll another channel. Oh, look at this. What a nice 15-minute bar. That's a nice 15-minute bar. Tell me it's quite a bit. We haven't got long for this world this morning. What time is it? It's now 10:15. I'm actually in Spain, trading from Spain at the moment, so I'm in a different time zone. We had the manufacturing PMI, just for your heads up, coming at 48.3, exactly on the consensus. We've got ECB speech in 4 minutes, and we've got the PCI data out in 44 minutes. Won't be around for that. We'll do a 15-minute bar here as well before we go. We'll either get a 15-minute fractal or a 15-minute bar, whichever comes first. And on this one, we're going to trade 2%. So we've got does anyone want me to do the 15-minute bar on gold live? Or, what about the guys in the room?
Yeah, you could, yeah.
I'll give it a go.
Yeah, okay, great. Yeah, we'll do that then. I don't mind staying on and doing it if it helps people. So we're either going to do a fracker or a 15-minute bar. Oh, Paul, I've got the note. I'm back in England tomorrow. I can help you with the robots on tomorrow afternoon if you want.
Yep, that sounds good. There's no panic.
Yeah, all right, no worries. I'll give you a shout when I get back in the UK. So we'll get those bots all set up and working. While we're waiting that 12 minutes, we're either going to get a fractal break or a 15-minute bar, whichever comes first. Just let's have a look at what we're doing with the USD Japani at the moment. USD Japani. So there we are. The USD Japani is following through, and we're looking for another 1% on USD Japani as well. I'll see if I can post the results in the comments after the stream is finished and after the trades have finished, so people can see actually what's actually happened in the markets. So it's very easy to check, of course. And let's have a look at the DAX. DAX shouldn't really have done any huge movements with that news. No, it hasn't. No, it's steady status. Let's go. The initial balance indicator is there. Let's just have a look at the IB. So you can see here the initial balance with a sort of indicator here. We've got the market bound, the market. Well, it's in the initial balance it's one of the very, very old trades. It's the first hour of the market movement. And we just have an indicator that marks the first hour up, so you can see how the market is trading. I can't see this doing too much of an exciting trade until the news is out. People have took a view on the news, everything's as is, and things are potentially building. But you never know, do you? You just don't know what's happening. So a bit of a recap on gold. Right. I did say we would look at how long have we got till gold? 10 minutes yet. It's either this bar or a fracker, whichever. And I suppose we could just use these filters here. Let's just put the Forex on view. So you can see getting ready with a fracker bot here. For Germany, it's overcooked. Well, that went quick, didn't it? That was an odd pound, wasn't it? That was just setting up. Oh, on one. Sorry about that. Am I typing this in wrong, aren't I? Oh, no. There we are. And it's come up again here. So this is saying get ready. So on the 1 hour, it's going to be overcooked. Yes, it is. So it immediately finds the trades for you. If you go to this is for putting the robots on. We have bots called the Dirty Dozen, and we stick the robots on. It goes away and trades for us. And this just tells us when to put the robots on. And we switch the robots on as one way of getting in, 3 ways of getting out with profit. And it manages the trades for you. So this is negative. Quite clearly see it's negative. It's pulled all the way up. Not one that we want to do. We've already made some money this morning, and we've got plans to make more with the trades that we're doing, so we don't need to push it anymore. Let's just have a look, see if there's a perfect. So here, these filters here, this is the perfect setup. So what this one does is searches the market, and it tells you the 4-hour trend, the 1-hour trend, the 15-minute trend, and then it goes into 5 minutes, sorry, and make sure the whole market is sprung loaded from 5 minutes to 4 hours to give you the perfect setup to go short. Oh, and it's found those 5 instantly. So if we just hit one, anyone, I'll do the Aussie USD, and it's saying this is perfect to go short on. So you can see it will already have done the analysis under the 4-hour, under the 1-hour, under the 15-minute, and this will be sprung loaded back into 5 minutes as well. If you go down even further, it's absolutely sprung loaded. So where it's really saying, oh, head and shoulders there, what it's really saying is get ready to trade. And for me, and in this room, the idea is not to go searching the trades. We can use our AI technology to go and find the trades for us. Our job is to understand the strategies and be disciplined, have the patience to then choose your strategy you want to use. And there's 5 opportunities here, and then execute the strategy and hopefully take the money. The issue, of course, here is that the strategies you've got to be back tested, got to be proven. And so long as they work, more often than not, I'd like to think, well, no, I wouldn't like to think, they're all back tested. We work all of the kind of the weak strategies work 70% of the time, and the better strategies work a lot more, a lot higher probability hits. And that's really nice. So yeah, your choices is pick up the toolbar. We've got a whole bunch of strategies, a dozen or so for every market condition you can think of. You just apply your tool, switch the button on, and we'll let it do its thing. So on this one, what you're waiting for is a 15-minute bar reversal. It's already been, there's a 15-minute bar as well that happened. We didn't take this morning, of course. It wasn't on the plan to take, but that one would have maybe it worked, maybe not. Touch and go. It's no good painting a picture to show it worked. That's after the event. You weren't there, so you don't know it. The worst position you would have got was a stop to entry, because once it gets 3/4 of the way down, we always put a stop to entry. So it could have been a no loss trade. There's another one. There's another one starting to pull back. And odd swiss. There's another one. It's one we did yesterday. And we were going for the BRN, big round number, 5,500, and obviously smashed that target coming down yesterday. Is the analysis still on there? Is that? Yeah, it comes screaming down, and yeah. What else? What we're going to do else? Oh, it's gold, isn't it? Going to go back. So all right, so this is the perfect short, the perfect long. So didn't talk about crude. Crude today is pulling back, and it's getting ready to. It's saying get ready for checking a 15-minute bar to start going long. It's in service switch over there. Market's gone quite flat, and it's getting ready to turn. USD CAD's another one. So there's another one for going long. It's pulling back, and we're waiting for that to do its thing. These are just for the bots. For the bots. Right. I'll do the stats for the bots, the dirty dozen, but on the website, of course. So the stats, USD Swiss and USD CAD did not trigger. So unfortunately, well, we made 14.7% bank on March, which was not as good as February, which made 17.2, and January made nearly 25. So that's not bad. So since January the 1st, we made 56.85% on the bots, which is pretty damn good, really. But I'll do the stats on those. Average performance per month, making 19, completely unheard of, 19% a month. And yeah, that's really, really good. I'll do those stats later today. Oh, hi, Martin. We've got a... does this strategy work on multiple time frames like one day? Do you know, I always get these comments. Does it work on a different time frame? My question to you is, why should it? Why do you want to use a 1 week or 1 day time frame? You're a day trader. That's not day trading time frames. So it might. You're going to have to back test it. These are philosophies that actually do work on multiple time frames. But as a day trader, I always get this. People, and this isn't directed at you, Martin, directly, but we've got so many people on YouTube that are just moths on lights, so just dipping in and out, dipping in and out. And they're trying to find the golden nugget to make money. And they never, ever find it because they won't concentrate and they won't watch a video till the total end. And the only reason we show these strategies is because they work. So if you don't want to use a strategy that actually works, you want to apply it to something else that might or might not work, they are good. Test them yourself and let me know in the comments later if it does work. But the reason we have these strategies on these time frames is because we know they work. So I hope that answers the question. They could work on multiple time frames, on much higher time frames, but why would you want that? We have things that we use, filters that we can use on longer time frames, and we call them the SAR, stop and reverse, big 4-hour time frames, and we can search to see if there's a strategy there that might work. So there's one here. We've got 2 opportunities that work on a 4-hour plus time frame, multi-day. One is wheat, and if you what this has done is it's identified that this is a short on wheat technically, and you can see it's ready to come off and go on its next leg. USD Swiss, again, it's pulled all the way back up and it's ready for its next leg coming down here. So we have strategies for every time frame. If you're watching a strategy that we're applying at 5 minutes or 15 minutes or an hour, and you want to do it for a day or a week, then it will have to change slightly. And the reason I'm saying that is because every market is a different size. So we've got 8,000 pip market there as versus to the USD Japani, which is one of the biggest markets, which is 14,000 pip. And then the biggest, of course, is British pound, JPY, which is about 18,000, is it 19,000 pip market. So the volatility, the rate at which the market moves up and down will range from euro pound, 30, 40 pips a day, to USD Japani, that will do 250 pips a day. So depending on the volatility of the market, you will have to adjust your strategy on how you enter the market, because it's no good using a strategy that breaks a 9 EMA on 15-minute bar if you want to apply it for a week on the same asset, because the market would probably have to move best part 500 or 600 pips before it would break a daily or weekly bar, and you've missed out all of opportunity. But if you're not a day trader, then that doesn't bother you. But there are lots of other things you can do as a day trader, as a swing trader. Sorry to go on about it, but I get this all the time. Oh, that's a great strategy. Will it work on something else? Question, why the hell would it? Why the hell would you want it to if it's going to work on the strategy we've just shown? But people have got jobs and they've got other things that they want to do. And but we have in the room, if you want to have a look through the room, give me a shout, drop me an email, whatever. I'm quite happy to show you through the room, just as a quick scan through to show you what the other trades that we do that would work on a daily or a weekly. That's no problem. Let's just have a quick look now and see before we go. What's gold going to do? 15-minute bar on gold. Let's just take this off because we've already won on here. Let's clean this up and we'll use this. We'll use a 15-minute bar. You don't need the fucker on that. We can get rid of that fucker. So there we are. There's a 15-minute bar trade there. Perfect. So we can set this fire and forget. Get rid of that trade. We don't need that now because we know we've got a 15-minute bar. So the swing high, swing low is 11.4 there. Spread is 0.3. So, you know, we could get rid of the 12 pip stop on that without a problem. And we've got at least 13 pips for a double tap or going to the very top here. And I'm going to go for the very top here. So I'm going to go 12 and 20, 12 and 20 pip target, which is what we did earlier with our Fibor. A new all-time record high would be required. Whilst Trump is still saber-rattling with his tariffs before the second, we should be able to do something quite nice in here. So I'm going to put 2% on here, 12 and 20, and we're going to go for so that I'm going to go for a rounded break here. 0.3 is the spread, so we're going to round that to, there we go, that'll do the job. And we'll adjust this to be precise. I'll tell you, we're going to 3.155, round the Fibor up, or round the Fibor down. So we're going for 12 pips with a 19 pip target on this occasion. So that will give us 1.2 on a 1% risk, or a 2.4% trade on a normal on a 2% risk. So put that there. That's your 1-to-1 risk reward. You can put an alert up here before we get to the tops, and you could choose to take half off. You could choose to take just your 2%. We lost one on the FTSE. We made one back on gold. We've got the puts on, we've got the shorts on, we've got USD, Japani on and running. And then if we make 2% on here, that could give us 3 or 4% for the day, which would be none too shabby, really. So I've got visitors arriving in 25 minutes, so I need to tidy up, get rid of all the coffee cups and mugs and things. So I hope everyone enjoyed that on the YouTube. And for the guys in the room, I will be on at 2:15, and we will trade the gap, the Dow gap. Okay, we'll do the Dow gap at 2:15. So I'll be live.
Steve, just quick before you go, on the FTSE, is it going to rebound back down towards the close, or is it?
That's what we're aiming for, yes.
Okay. All right.
Okay.
Yeah.
And when the market does come down to close, because it will, we'd take out the puts as well.
Okay, thank you.
No problem at all. Are you doing the are you Paul, Mark? You were just speaking before. Are you doing the gonna come do the gap today, or are you busy?
I should be able to make the gap, Steve, yeah.
Yeah, it's only 15 minutes. It's worth 15 minutes for a percent, isn't it? 1%.
What time are we on it, Steve, on that?
Quarter past 2.
Perfect.
Now
See you.
now the clocks have moved on GMT. It's quarter past 2, not quarter past 1. All right, guys. See you
All right,
later.
thanks, Steve.
No worries. Bye-bye.